right. And we got some music. All right. It is now my pleasure to bring onto the stage Peter Caldini, CEO of Acreage Holdings, to give his presentation. Clicker right here. And guys, remember, please form a queue at the microphone. It's just a lot better for everyone to hear those questions. Thank you.
All right, thank you. Good morning, everyone. Peter Caldini. It's a real pleasure to be here today and share an update on Acreage, or what we like to call Acreage 2.0, or the new Acreage. I think a lot of people know know Acreage and the history of Acreage as one of the original MSOs. Got out of the blocks very quickly, had very broad geographical expansion, as Deborah said earlier today, probably got a little bit out ahead of itself. And we had a number of challenges. But I think a lot of people don't know the Acreage of today. And, over the last 12 months, we've undertaken a significant transformation. And I think as an organization, as a business, we're well positioned to take advantage of tremendous growth opportunities in the cannabis industry. We have a great footprint in some very attractive states. When you talk about New York, New Jersey, Pennsylvania, Ohio, just to name a few. And we've also developed the operational discipline and industry know-how to take advantage of the tremendous market opportunity, but also how to leverage these assets. So with a new leadership team, we've certainly done a lot of work over the last 12 months. We definitely have a lot of work to do. But we're incredibly excited about the opportunity for Acreage in the future. Why we're so excited, as I mentioned, we have a great footprint. Over the last 18 months, we spent a lot in terms of refining our strategy and being more focused on our core states. That meant we had to make some tough decisions and divest some non-core states like Oregon, like Maryland, like Florida. These were states that we felt that we couldn't be successful in the long term. Instead, we wanted to put our resources into states like New York, Pennsylvania, New Jersey, Ohio, where we felt that these are highly attractive markets, significant growth opportunity in those states. But most importantly, we feel we have the right to win in these states, and we expect to win in these states. Another factor is we have a number of new members to the leadership team that bring significant operational experience and also the skills to take Acreage to the next level. We have great retailing and wholesaling capabilities, and we also have very strong brands based on high quality products. So we're able to compete in the premium segment, and in a lot of cases being able to minimize the impact or the risk of price compression, margin compression as the industry continues to evolve. And then lastly, we have the relationship, a very strong partnership with Canopy. And as we build out our operating capabilities and we deliver on our financial results, we continue to explore ways to leverage the operational as well as the financial resources of Canopy to accelerate our growth in the U.S. Over the last 12 months, we've been laser focused as a leadership team, as an organization, around three strategic priorities. One, driving profitability, and that's really applying a lot of the operational financial discipline, aggressive cost containment. And we've seen the benefit of that. We achieved profitability for the first quarter this year for the first time. That accelerated in Q2, and we expect that to continue in the back half of this year and on into 2022. Strengthening the balance sheet, that goes beyond just tapping the capital markets. It's really about optimizing your footprint. So by divesting some of these non-core states that were a financial drain, organizational drain from a resource standpoint, and taking those cash considerations and putting it into other states. And then lastly, it's around accelerating growth in our core markets. So we have a great footprint in core markets, building out capabilities, but it's also building out our infrastructure. We have a number of capital projects in these states. So really positioning us to take advantage of market opportunities that exist today in these states under a medical market, but also preparing us for when it turns to adult use. Little overview of Acreage at a glance. We operate in 11 states. We like to say we have 8 core states that I'll highlight in a future slide. We have 30 operating dispensaries. In most of the markets that we operate in, say New York, New Jersey, Ohio, we're maxed out in the number of dispensaries we can have. In some of the states that we operate, we make the strategic decision to not continue to increase retail, but really focus on the wholesale side of the business. We have 9 cultivation and processing facilities across the U.S. with over 500,000 square feet of cultivation capacity. We have a number of capital projects ongoing, which I'm going to highlight, that should significantly increase that over the next 12 months. So we're primarily a vertically integrated player. We have capabilities across the value chain. However, in some states, like Pennsylvania, we're only on the wholesale or cultivation side of the business. And then in Connecticut, we're just in the retail side of the business. That's just because of the licenses that we currently have. But we do have capabilities along the value chain that we leverage in all the markets that we operate. So this is our core states. And I'm not sure you can see all these, but I'll highlight some of them. But the top 3 states on the top of this chart, New York, New Jersey, and Ohio, we prioritize those states above all the other states we have. These are highly attractive states, significant growth opportunity, and we also have strong capabilities in those states. So just to go through a little more detail in each one of these states, New York, we have 1 of 10 vertical licenses. We have 4 operating dispensaries. We're looking to expand that to 8 as a part of adult use. And we have an established cultivation facility in Syracuse that we're going to be building out in preparation for adult use. In New Jersey, we're one of the top 3 players in that state. We have 3 operating dispensaries, and we also have 2 cultivation projects that should give us close to 200,000 square feet of cultivation capacity in time for adult use. And then Ohio, we're really excited about the Ohio market. We just completed the transfer earlier this month. So now we're going to be able to consolidate that in our financials. We're the number 1 player in that state. We have 5 operating dispensaries, and we just completed a cultivation project in Q2. So those are our 3 top priority markets, highly attractive for us. But some of the other states that are in our core, Pennsylvania, as I mentioned before, just primarily a cultivation and wholesale player. We have a great brand in that state that operates in the premium segment. Even though we did a build out the beginning of this year, we're constrained from a capacity standpoint. There's a lot of demand for this brand as we consider adding additional capacity moving forward. Connecticut, we're one of the leaders, or if not the leader from a retail standpoint. We have 3 of the 18 dispensaries in that state. And so those 2 markets, as we move forward, we're going to be looking at potential M&A opportunities to complete that vertical in those 2 states. Illinois is another state that I want to highlight. We're primarily a wholesale player in that market. We just built out our cultivation facility in Q2. We do have 2 operating dispensaries, but we see most of our market opportunity is in the wholesale market. And then we also have Massachusetts and Maine as 2 part of our core markets. Give a little more information in terms of the infrastructure we have in those core markets. New York, as I mentioned, we have 4 operating dispensaries, looking to expand that. We also have a number of cultivation projects ongoing. We expect to reach close to 235,000 square feet of cultivation. Phase 1 of that will be completed in the first half of 2022. In New Jersey, I mentioned we have 2 cultivation projects ongoing. The first one is at Egg Harbor. It's our existing cultivation facility for our business in New Jersey. We have an expansion project there. We expect that to be completed by the end of the year, well ahead of schedule. And then the second one is at Sewell. And unfortunately, we had a negative impact of Hurricane Ida, but we only expect that to delay it to the back half of next year. Two other states I just want to highlight on this chart. I mentioned we completed cultivation expansion projects in Pennsylvania and Illinois. Considering the demand we have in Pennsylvania, we're evaluating and we'll probably move forward with additional cultivation expansion project in that state. But we don't expect that to really impact our financials until mid-2023. And we're also doing the same for Illinois. So overall, we have about, in the next 12 months, close to 760,000 square feet of capacity for across the U.S. for our core markets. Why are we excited about the footprint? I think everybody knows the attractiveness of some of these states. We expected the addressable market to be around $9 billion. I think it's anybody's guess what that number is going to be, but I don't think there's any doubt in terms of the attractiveness of markets like New York, New Jersey, Pennsylvania, Ohio. And as an organization, we have existing operations there. We continue to build out our capabilities, continue to build out our infrastructure to take advantage of the market opportunity that exists in that state today, but also in preparation for adult use in the future. Here's some of our brands. We have two national brands. The Botanist, that's our largest brand. It's also the banner for all our retail dispensaries. We're converting all of our dispensaries to the Botanist. So far, we have done it in all the states. Only 2 states remaining is Maine and Illinois, which we expect to be completed in 2022. We also have a new brand that we just recently launched, a super premium. It's a craft of cannabis type of brand for the cannabis connoisseur, Superflux. We launched it in in Illinois, and then we're going to be rolling it out later this year, by the end of the year, in Massachusetts and Ohio. We have the Tweed brand, obviously through our partnership with Canopy. And then we have 2 regional brands or state local brands, Prime, which is in Pennsylvania, and then we have Innocent in Illinois. So I mentioned before, we've been laser focused around our priorities, around our strategic focus, and around driving profitability. Give a little more detail on that. It's around a lot of the operational financial discipline that in a lot of cases didn't exist or doesn't always exist in the industry, but it's around aggressive cost containment, portfolio management, reallocating resources that you need to do when you're managing a business across multiple geographies. We've seen the benefit of that earlier this year in Q1 and Q2, but as we build out capabilities and build out scale in our core markets, we expect that to really accelerate moving into 2022. Strengthening the balance sheet, a lot of that was really optimizing our footprint. So take, for example, a state like Florida, which is a highly attractive state in a lot of respects. But when we looked at it, we just said, hey, we didn't have the right to win. So instead, we sold that. We got about $60 million in cash considerations, or in total considerations. We were able to use that funds to support our businesses in New York and Pennsylvania and New Jersey. We're also looking at tapping in the capital market to provide resources to help us expand moving forward. And then accelerating growth in the core markets. It's beyond capital projects. It's also building out those capabilities around marketing, around wholesale, around retail, innovation, making sure that we're optimizing our businesses in those states. And then it's around the capital projects. We have a number of capital projects in these core markets. As I said before, it gives us the opportunity to exploit the market opportunities that exist today, but also be in preparation for adult use when that comes. So we have a lot of new members of the leadership team. I'm going to point out some of the new members. I actually am a new member as well. I started the back half of last year, actually in the back half of December, so pretty much the start of January this year. My background is in consumer healthcare with companies like Pfizer, Bayer, and Wyeth. A lot of experience in emerging markets, a lot of experience doing turnarounds, which I've been able to apply here at Acreage. The second hire in the bottom left is Steve Gertz, our Chief Financial Officer. A lot of experience in the public companies, in financial services, also in retail. Then we have Katrina Yolen, who's here today, so any tough questions, please address it to her. She joined at the end of April. Strong background in consumer packaged goods with GSK, with Kraft, but also a lot of experience in the cannabis space with Curaleaf. And then our most recent hire is Brian Murray for government relations. Strong background at Pfizer, has a lot of experience at the federal, state level. More importantly, a lot of experience in the grassroots dealing with the municipalities, which is critically important as you drive your projects at the local level. So we're really excited about the future at Acreage. Just to kind of summarize, we got an attractive footprint. Not only are we operating in these states, but we're building up our scale and capabilities in preparation for adult use. We have market-leading position in a lot of these states. We also have high-quality, premium type of products, which really should minimize some of the impact as the category continues to grow from a price compression as well as margin. We've really been turning around our financial performance, and we expect that to accelerate moving forward, especially as we build out our scale in some of our core markets. And then lastly, it's around the Canopy relationship. You know, as we, as an organization, built out our operating capabilities and we delivered on our financial results, we are exploring additional ways to leverage Canopy's resources, both from an operational, organizational, as well as financial, to help us accelerate our growth in the U.S. So we're really excited about the future. We see this as Acreage 2.0, the new Acreage. And at this point, I'm happy to take any questions.